Welcome back to the channel. It's great to have you here again. High yield, weekly income, monthly income, eye-popping payouts. That's how YieldMax's MSTY ETF is being sold, and for many investors, it looks like the perfect way to earn big in 2025. But what if I told you that behind those double-digit yields lies a series of hidden risks, some so deep that most investors never notice them? Until it's too late. In today's video, we're breaking down the hidden dangers of YieldMax's MSTY strategy. We'll explore how this ETF really works, why it pays so much, and the risks most investors ignore. Stick around, because if you're considering MSTY for your portfolio, this video might save you from a costly mistake. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. MSTY, officially the YieldMax Mr. Option Income Strategy ETF, is designed to generate monthly income by selling options linked to MicroStrategy Incorporated, ticker symbol MR. MicroStrategy isn't your average tech stock. It's essentially a Bitcoin proxy, because the company holds billions of dollars in Bitcoin on its balance sheet. That means MSTY's value moves closely with Bitcoin, a notoriously volatile asset. But here's the key: MSTY doesn't actually own MicroStrategy shares. Instead, it uses synthetic exposure through swaps and derivatives. Then, it sells call options on that exposure to earn income. So what you're getting is not stock ownership, you're getting exposure through contracts, with capped upside and option income. Let's break down the strategy. MSTY earns income by selling covered call options tied to MicroStrategy's stock. When those calls are sold, the ETF collects a premium, that's the income paid out to you as a monthly dividend. But here's where many investors get it wrong. That income isn't free money. It's the result of trading away potential upside in exchange for short-term cash flow. When Mr. Stock rises sharply, MSTY's returns are capped. You'll still earn income, but you'll miss out on the big rally. And if Mr. falls, which it often does, dramatically, MSTY's income might not be enough to offset the loss in net asset value. So, high yield doesn't mean high return. It means high trade-off. Now, let's dig into what most people don't see, the hidden dangers that come with MSTY's structure. 1. Extreme volatility. MicroStrategy moves like a levered Bitcoin play. If Bitcoin falls 20%, Mr. might drop 30%. That kind of movement makes option income unstable, and MSTY's price can swing 10% in a single day. 2. Synthetic derivatives. Because MSTY doesn't hold real Mr. shares, it uses swap contracts. That introduces counterparty risk, meaning, if a financial institution on the other side of the swap fails, MSTY could face serious losses. 3. Single stock concentration. This ETF is entirely dependent on one company's performance. Unlike JEPI or DEVO, which diversify across multiple sectors, MSTY lives and dies by MicroStrategy's price action. 4. Tax headaches. Those massive monthly payouts are usually taxed as ordinary income, not qualified dividends. That means you could lose a big portion of your yield to taxes, especially if you hold it in a taxable account. 5. Value decay. Option income ETFs that constantly sell calls tend to lose value over time. They give up the potential to grow, trading it for short-term income. Over several years, that can eat into your total return. Humans are wired to chase rewards. When we see a yield that's 40%, 50%, or even 70%, it triggers something powerful, a feeling that we've found a shortcut to wealth. But in investing, there are no shortcuts. Yield is just one part of the equation. MSTY's income looks attractive because of volatility, not because it's inherently more profitable. The ETF is monetizing risk, and you, the investor, are absorbing that risk in exchange for cash flow. So, while monthly payments look satisfying, remember, they come from taking the other side of a volatile trade. To understand where MSTY stands, let's compare it to similar ETFs. YieldMax's Ultra series, like Ulti and YieldMax, follow a similar concept, selling calls on single stocks like Tesla or Nvidia. The difference is in volatility and underlying exposure. MSTY's link to Bitcoin means it's the most unpredictable of them all. JEPI, by contrast, spreads its exposure across 100-plus companies, using options on the S&P 500. That's a more balanced, lower-risk approach, and it's why JEPI's total returns are steadier, even with lower yields. So when you see MSTY offering 60% yield while JEPI offers 10%, ask yourself, is that extra yield worth the massive jump in risk? MSTY isn't for everyone, and frankly, it's not for most investors. Avoid MSTY if you want long-term capital growth, prefer stable, diversified holdings, don't understand options and derivatives, rely on consistent, predictable income, can't handle large drawdowns. MSTY is better suited for advanced investors who understand options and can tolerate wild price swings. It's more of a trading vehicle than a retirement income solution. If you're attracted to income ETFs but want less risk, here are better options to consider. JEPI, diversified, high-quality covered call ETF. Devo, focuses on dividend-paying blue chips with options overlay. SCHD, growth through quality dividend stocks. Yield/Yield, income from broad index options. These might not offer 50% yields, but they prioritize sustainability and protection, not just short-term payouts. YieldMax's MSTY ETF is one of the most fascinating products in today's market, combining technology, crypto exposure, and aggressive option strategies. But don't mistake innovation for safety. Behind every high yield is high risk, and in MSTY's case, that risk is amplified by Bitcoin's volatility and derivative exposure. If you're chasing monthly income, do it wisely. Understand the structure, the tax impact, and the long-term implications before investing. Because sometimes, the best investment decision is the one you don't make. Thank you for watching. If you learned something new, hit that like button, subscribe for more ETF deep dives, and share this with someone considering MSTY. See you in the next video.